Right, you're watching live from Paris, and it's time for our business update. And Yuka Roya joins me on set. Good morning, Yuka. We're starting with the markets, and the wild ride continues on the last day of the trading week.
Well, except here in Europe, where markets opened a short while ago. Here, the investors seem to be calmer at the open and don't seem to be on their way to replicate the sell-off in the US and Asia. London's FTSE 100 and Paris's CAC 40 opened in the red, as you can see, with Frankfurt DAX around the flat line. Now, earlier, Asian shares, though, fell sharply. Chinese blue-chip shares led the decline, sinking to 4-month lows. The Shanghai Composite tumbled almost 6% at one point before recovering slightly. Now, that trend followed another rout on Wall Street. On Thursday, the Dow Jones accelerated losses in the final hour of trading, closing more than 4% in the red. The S&P also hit a new low for the week. Now, analysts, though, are not worried about a potential market crash. The economic fundamentals, such as unemployment, GDP growth and corporate data, are strong, and there are no signs of a recession. The market, despite the volatility, is set to remain bullish, according to most market watchers. Lauren Bestecker has this report.
When the U.S. Labor Department announced worker wages had grown at a fast rate in January, many thought it was cause to rejoice. But not stock market investors, who fear a healthy job market could hint at future inflation.
It's not really here yet, but investors tend to not wait around. They're looking a couple years in the future. So when they see something that they think could turn into serious inflation a few years out, it can get people worried.
Stocks continued to plunge on Thursday, and for the second time in 4 days, the Dow Jones Industrial sank more than 1,000 points. After making huge gains at the start of 2018, many companies have struggled in the past week, with the drop affecting sectors such as tech, retail and banking. But analysts say the recent wave of investor panic doesn't mean the economy is doing poorly.
People have to realize the stock market and the economy are two different things, and the technicals of the stock market are going to fight the fundamentals of an improving economy, maybe for the rest of this month.
Many say they were expecting the plunge, as stock prices had become too expensive relative to company earnings. And with the market currently in its second longest bull run of all times, analysts were quick to point out the latest drop was a natural correction phase, rather than a full-on stock market crash.
Some more of the day's business headlines for you now. And the Silicon Valley tech firm Qualcomm has rejected a record $121 billion offer from rival chipmaker Broadcom. The company's board unanimously turned down the hostile takeover bid, saying it significantly undervalued the tech firm. However, Qualcomm leaders also say they're finally open to meeting with the Singapore-based potential buyer. China's ride-hailing giant Didi Xuxing has announced a deal with Japan's SoftBank to develop a taxi app in Japan. The new taxi venture is the latest step for Didi, which has been pushing to beef up its presence outside China. SoftBank has recently become the largest shareholder of Uber. The taxi market is tightly regulated in Japan, and services like Uber have struggled to make inroads. The National Road Freight Association here in France says traffic chaos caused by snow this week could cost at least €60 million per day in lost revenue. The snowfall on Wednesday caused the shutdown of a major transport route near Paris, causing hundreds of kilometres of traffic jam. It's not only freight businesses that are affected. Many companies saw employees staying at home, and shops are facing shortages due to delivery delays.
And finally from you, Yuka, here in France, most schools don't have school uniforms, but in Japan, a public school has come under fire for its decision to renew what its pupils wear.
The Taimei school in the hyper-chic Ginza district in Tokyo, that's a primary school for kids 7 to 12-year-old, it has announced a plan to introduce uniforms designed by Armani. The price tag for the new set is around €600, 2.5 times more expensive than the current model. The school says that the choice reflects its prestigious surroundings. That, coming from a public school, though, sparked concern among the parents, and the story even made it up to Parliament. Japan's education minister brought up the subject during a debate on a budget on Thursday, forcing the finance minister Taro Aso to admit that the uniforms are a bit pricey.
A bit pricey.
Yeah, only a bit.
€600, that's quite steep, I would say, especially given that, how quickly kids
grow out
of them and they have to be replaced every few months. Yuka, thank you so much for that. Yuka Roya there with the Business Roundup.